This is Nashimar, the CEO of InfoTaxCore.com, and we are a team of CPAs and EAs. In this program, we are going to learn how to determine if it is a rental real estate property or personal property for the tax purpose. We are going to apply different rules and regulations such as 14 days 10% rule, 14 days rule, residence test, and in order to determine if a dwelling unit is a real estate property or a personal residence for tax purposes. It is very common for individuals to report their rental property activity on Schedule E, and to calculate adjusted gross income AGI, it is common to deduct expenses related to the production of rental income. Now we are going to learn different rules and the test in order to determine for the tax purposes if it is a rental property or non-rental property. What is 14 days rule? If you use the property for personal purposes for more than 14 days in a year, one or more. If you use the property for personal purposes for more than 14 days in a year or more than 10% of the total days, it is rented to others at a fair rental price. Whichever is greater, it is considered a personal residence. What is 10% rule? When the residence is rented for over 10% of the total number of days, it is classified as a rental property. What is residence test? If you rent the residence for less than 15 days, you do not have to report the rental income. Deducting rental expenses that correspond is not allowed. If the property passes the minimum rental use test but fails the minimum personal use test, the property is considered a vacation home, and rental reduction may not exceed the gross income derived from rental activities. When deductions are limited to gross income, the order of the deduction is in this order. When we have a income and losses, so there are always some limitations which we have to apply in this order. Number one, regardless of rental income, expenses that can be accounted are deductible, such as mortgage interest and property taxes. Number two, deductions that do not affect the basis, like routine repairs and maintenance. Number three, deductions that impact the basis, such as depreciation. Number four, the expenses should be divided between personal and rental purposes according to how many days they are used. If the property meets both the minimum rental use test and personal use test, all deductions can be taken and a loss can be experienced if the passive loss limits are met. Now, in order to determine the property's rental or residential test for tax purposes, we are going to learn some rules and regulations. Rental use test pass. If the rental use test pass, if the property was on rent more than 14 days, it is considered the rental use test is passed. If the property was on rent equal or less than 14 days, rental use test is failed. And if the property was rented less than or equal to 14 days or less than 10%, then the personal use test will be passed. And if the property was rented greater of 14 days or greater than 10%, then we'll consider it that the personal use test is failed. So in this program, we have learned how to determine if a dwelling unit will be considered as a rental real estate property or a non-rental real estate property in order to calculate the reportable income to the Internal Revenue Service. Thank you and God bless you.